today?
Red leather, yellow leather. All right, just practicing my audible exercises. Hello, everybody. Thank you. Hello, Andy. I hear you laughing over there.
Hey, Steve. It sounded good, man.
Hey, everybody. I see some familiar names. Good to see you guys. So, boy, the Tuesdays, they fly by quickly. Here we are for another Tuesday. Regularly scheduled trade of the week, March 6, 2018. Let's get into it. But of course, the first few slides, the first one, of course, being the disclaimer to remind you all that Andy and myself, we're not licensed brokers. We're not registered investment advisors. We're traders, users of the program, and employees of Trade Ideas. So everything you see here needs to be taken in the context of information only. Please do not construe anything we talk about or show here as investment advice. All right. The familiar slide number 3, reminding people how much we try to engage the users, the new users, and even the intermediate and advanced users. We have a lot of connection points for you to connect with us, starting with the live trading room with Barry Anderson every day during market hours. Actually, a half an hour before the bell rings, he opens up the room, and there's hundreds of people in there, and the word's getting out because it's a free room, and the feedback that we're getting is like, this room is just amazing. I can't believe it's free. So the word is getting out. Barry is a unique individual, does a great job trading his own account, moderating the room, doing a great job moderating and helping people with questions and technical support on the Trade Ideas platform. So a great place to hang out during the day. And then, of course, you've got the afternoon webinars. Monday was Jamie. Today is myself. Tomorrow is Dan and Brad talking about the product and questions and answers and what's coming down the pipe for some new features. Tomorrow, or actually Thursday, excuse me, Andy and Jamie will put together a webinar after the close of the market on Thursdays. And then, of course, our Friday support sessions. Open to everybody, whether you're a user or not. Come on in, ask questions. We have it for 3 hours. Same format as we're doing right here. Go to webinar with the questions box and screen share. For those of you that do sign up, going forward, we've actually improved our education. We have a group. We call it TI University, and it's basically Mondays through Thursdays. Mondays and Tuesdays are more beginning. Wednesdays, Thursdays are more advanced and intermediate. And so, again, it's not listed on this slide, but if you do sign up and become a user, you'll have access to sign up for some really quick training as opposed to having to wait a few weeks for a one-on-one. And yeah, so those are all the reasons that we believe that we're doing a pretty good job of helping people get up to speed and get the learning curve on their side. We're always available. And so basically now, aside from these afternoon webinars, we have webinars going pretty much Monday through Friday for help and support. So if you need more information on that and you're a current user, info@trade-ideas.com to be pointed in the right direction. And all of that, of course, is one of the reasons we have a really nice subscriber growth, which does need to be updated because we're up here in the blue area now. But thank you all for showing us your loyalty with our product. Before we get started, just a quick reminder, the Brokerage Plus tool is for intermediate to advanced users. It's a tool that allows you to connect Trade Ideas to interactive brokerage only currently at the moment. When it comes out of beta and becomes a production version, there will be a charge for it as a license, and we'll probably point towards another brokerage platform to do the same thing with. But again, this is something that you need to learn how to crawl in the markets before you can even walk or run using this this program. You got to know what you're looking for. You can't just come in and be a brand new person to the markets and trading and expect this to be the tool for you. So please, heed that advice, and get your teeth, cut your teeth for 3 to 6 months and learn the markets and learn the program and learn what you're looking for, and then this might be an interesting tool for you to graduate to. So let's get started. We always start off with the theme of man and machine with the great quote from Paul Tudor Jones that no man is better than a machine. However, no machine is better than a man with a machine. So that's what we are at Trade Ideas. The machine is our technology, and the human being is us, the person that is trading the markets using the technology. What I'd like to talk about today is our typical format for the most part. Market recap, we have a few things to talk about there. Holly recap, We had a few things to talk about there. The trade of the week, how was BOFI selected and why? How's it doing? Where can we expect it to go from here? And then a couple of maybe just trade ideas hacks to kind of help people out. One is when you're going through and looking for just a single symbol to try and find, like reverse engineer, like how can I build a scan that's going to show me WTI on last Thursday at 8:57 a.m. So we're going to kind of show you a little trick on how to do that. And then I think it's time for a good sector scan where we go through and take a look at the charts and get our comments on what sectors are looking weak and feeble, and what sectors are looking poised and ready. And then we'll finish it off with whatever time we have left using some Q&A. All right, everybody, let's get started, shall we? So I'd like to start on the SPY chart for the S&P 500, affectionately known as the spiders or the SPY. And again, this was January, and then everything changed in February. We had a big bounce mid-February. We got caught up in these moving averages. We got a little bit of Fed speak, which pushed the market a little bit higher, and then a pullback. But now what we're trying to figure out here, technically speaking, is this low right here, I'll mark it up for now, is this low going to translate into a higher low as we look back in 2020 hindsight? Well, we don't know at the moment. We can go on the information that we have at hand. So that's one thing that I've noticed is we did try to put in a higher low with a couple of green candles. However, the volume on these bounces is just pathetic. I mean, look at the three big red candles, volume. The last couple candles here, low volume. Lower volume, I should say, especially back here, we can notice. And again, I've talked about it before, you never really want to use the word distribution. It's kind of like using the word Alzheimer's because you really don't know what it is until after the fact. But distribution is basically something that can occur after a big market run where you have massive down candles on massive volume, and then light volume bounces. So that's kind of where we are. This market's still trying to figure out what it wants to do. The last thing of interest for me on this particular chart, and the S&P 500 pretty much is the benchmark bellwether that people watch, the futures. This 50-day moving average is flattening out. It's in blue, and you'll notice last Thursday it got hung up on that red candle. And yesterday it came right up to it, almost like today being a foregone conclusion that we were going to challenge it. And we did challenge it, but we didn't get very far. But on the good side, we finished up with a little bit of a bottom wick here. So some late day buying came in, as we can see here in the chart. We did not fall back. We held our own. SPYs held their own, and some late day firmness came back in. So what are the bulls going to need to be assured that this is going to be a higher low moving forward? And if it does become a higher low, that's really going to deflate the bears, especially after this big mess that we had back here. And it may just be that was the correction that everybody was asking and clamoring for. 10 to 12% in 2 weeks is a pretty big correction with a nice bounce. But like we've used the analogy before, plucking a guitar string, you pull it to an extreme and then let it bounce to the other side and slowly let it find its center of gravity again. Maybe that's what this market's trying to do. But the one final thing that needs to happen, I believe, in this chart is we need to get a close back above this 50-day moving average. I mean, we were able to do it here. We were able to do it here, albeit on low volume. But the price action got slammed right back down again. So we're trying to build a higher low. And today we definitely got stymied, by the 50-period moving average. People say, do these things work? Well, when you see things like this, basically, people that program algos or trade, we're all kind of working off the same indicators at times. And so that's why, some of these indicators can become their own foregone conclusion. It was definitely a wall of supply at this 50-period moving average. So today, we got hung up. But let's see what tomorrow brings. If we can close back above this 50-day moving average, I might, start getting excited again about moving higher. All right. And then of course we need to obviously get past this level of recent supply, which is where we got hung up before. So here's our range, guys. The 50-day moving average is looking like, it's going to be a decider. If we can get a close above it, then we can start to maybe come up and assault and see if we can take out these highs. And if these highs do get taken out, well, then we might just be back in the bull market again after a nice correction. I don't know. We'll see, because when I look at the Qs, little bit different story over there. After the walloping in February on the Qs, they too had a bounce, but they had a mother of a bounce. Almost so to where if I draw a line to the top, you can see we almost got all of it back. I mean, almost less than $1 there. So the Qs are showing relative strength. That's where the strength is for the most part in this attempt for the market to grab and dig in and put in a higher low and move higher. So in a sense, we may want to be watching the Qs as an early warning system to see if the Qs can get up and take care of this level. That might drag the market higher, albeit kicking and screaming with the bears. But notice how the 50-day moving average isn't even coming into play here, nor is the 20, nor is the 10. So the Qs are pretty healthy here at the moment. There's not much bad that you could say about the Qs, and some people might even be looking at this and saying, this could become an interesting cup and handle situation. So then we go back to the diamonds and the IWM. They didn't bounce with as much vigor. They're still trapped. The diamonds, the Dow, is still trapped here well under its 50-day moving average. And the Russell 2000 actually had a good day. I just noticed that actually. Yesterday it got held up at its 50 and pushed forward. So we can add that to the plus column for the general market across the board. The IWMs are looking solid above their level, and if they can take out this level, there might be something to be said for that. And the strength of the Qs looking good as well. But bellwether S&P 500, we really like to get this back above, closed above the 50, and then trading back above this orange line. If we can't, and if we take out this level, well, this is the danger level right here. This is the level we don't want to take out if you're a bull. All right. I hear you over there. You going to add anything?
Well, it's interesting that you, I didn't look at those IWMs either, but you know, it's not a tale of two tapes. We got a tale of four tapes here, man. It's very strange. Looking at the Qs and how strong they are, and the diamonds are really weak. Yep. One thing I will point out in the spiders, you may keep an eye out because I said there's a chance for us being range bound, and we could be painting ourselves into a nice little wedge here if we put in another lower high.
Just so you can see what Andy's talking about. Here's our first trend line. Grab. I'll put that one up there. I'll put this one. This thing is really fickle.
Yeah, it is. You got to look for the cursor. You know
Okay, here's what Andy's
we got time. Yeah.
Starting to see.
Yep, there you
we
go.
Got plenty of time. Let me just really dial this in here, and then we'll add another one. Markup, trend line, grab, highlight.
I'm not sure I'll even put that wick in there. Maybe the.
Which wick? Oh, the big wick.
The big wick down. That was kind of the gap down.
That was panic. That was panic. That was capitulation down there. Yeah.
And it was at the very open end, pre-market. Yeah.
Yeah. So you could probably draw something similar to that. And so bounce, like I said, plucking a guitar string, guys. Pluck, bang, 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 bang. So, you know, even watch these levels. You guys might want to put one of these on your chart and see this declining little trend line here from the top to the most recent lower high. We'll find out if that's a lower high, or we'll find out if this is just one big continuation pattern in the bigger scheme of things. A correction, back and forth, paint ourselves into a corner, and then the price will decide which way it wants to go.
Yeah, and keep an eye out. Usually, the tighter the corner, in other words, if it gets tighter and tighter in there and gets painted into a corner, then you could get an explosive move either way. So we'll see what happens.
All right, we'll turn these off. Very good. All right, so that is our market recap. Still not out of the woods yet if you're a bull, but we've got a little bit of work to do. But the good news is the IWM and the Qs are looking back saying, come on, follow me. All right, so let's see here. Oh, what's next? I think it's going to be AI recap. All right, let me just start by saying even the greatest traders have bad days. Even though the AI is still outperforming handily for the year, the S&P had a rough day today. And I don't think I've ever seen 1, 2, 3, 4, 5. I don't think I've ever seen this many stop outs in one day recently.
Never have.
And I don't think I've seen this bad of a performance on the histogram on one day on risk off anyway, as either. So, today Holly was basically telling us that first thing I noticed when I came in today, obviously, is always what's our strategies. And all we had were long strategies coming into today off of already 2 green candles there in the spiders, low volume bounce. And then we hit that ceiling pretty much early in the day. We hit it early. And, the AI just didn't have a whole lot to work with in terms of help from the backdrop of the market. Yeah, there are a lot of trades that did get have a downdraft and then turn around and went higher later, but I don't think I really want to focus on that today. I think I just want to really focus on the fact that when you see the AI struggling as much as you did today, and especially I'm talking to the people out there who've been watching this tool for a couple months now. This was a kind of a anomaly of a day, for lack of a better word. Hollywood had one hand tied behind her back, hitting 4 hands, couldn't even break out the backhand, to use a tennis court analogy, and go short. And I'm not even sure that would have worked. I mean, we had ourselves less than a 2-point range here in the spiders on feeble volume. But again, I kind of like the way it closed. I wouldn't be surprised if we see an attempt to push through that number tomorrow, that moving average. But the key is can we get a close to stay above it? So I think, again, I'm not going to delve into trade by trade today. It was just, if you're going to start to see a lot of stop hits pretty quickly in the day, that's our canary in the coal mine kind of rolling over on her back saying, well, I'm taking one for the team here. I really can't see any edge. You might want to learn from my mistakes and sit on your hands or only trade 1 or 2 things that are 5-star setups for you, because the AI, for lack of a better word, it threw in a clunker today. But we can learn from those clunker days to take it easy on what we're doing in our endeavors and our trades. You want to add anything?
No, there's not a whole lot to add to there. I mean, I looked back and I think I made a comment. It's just a slop fest today, back and forth action. It makes it very hard. And not only that, I see some, when you do get in days like today, you can have some really lower volume on a lot of stocks, and when that happens, you can have some really quick shakeouts. Well, look at all those risk off. They got stopped out there. The top 3, they ended up going up, moving higher. It just tells me that
Stop
could
out,
be some
higher. I'm helping you out here.
Yes.
Stop out right here, and then move higher. That's tough.
It really is. It was
stop out right here and lower, and then turn around and go higher. That's just tough.
It just tells me some predatory action out there going on. When they have low volume, they can shake and bake a lot of those stocks. And
I tell you, if we had broke through that 50 period and started trending higher today, I don't think we would have had that sloppiness that we had at the open. But it is what it is.
Mm-hmm. It's a bad day.
All right, so now on to something that's a little bit more fun to talk about, the trade of the week. I'll go ahead and set it up. I mean, there's a couple things to set up here. One, if you guys recall, we did make an attempt at the SDSs, which was a short call 2 weeks ago. And we're not going to continue to bang on that hammer because we got in the money here a little bit, and then the market bounced, which, of course, made our SDSs drop to the actual 7-cent, give or take, stop out, and then bounce back up in the money, and then pulling back now out of the money. So staying away from trying to, call a top in the market. There was every reason, and I would do it again in a heartbeat if I had the opportunity with just this amount of knowledge that I had, not the 2 weeks post these candles. So we weren't looking for a short, we were looking for a long. And one of the things, if we're going to look for a long in this type of environment, we want to make darn sure that long is going to be relatively strong. We call that relative strength, right, Andy? Is that what we call it? Relative strength. A stock that is strong relative to what the market is doing. And so a lot of the stocks had this horrible downdraft and then the bounce and then just shake and bake back and forth. Well, last week I pointed out, I'm sure I did it in this webinar as well, might have been the Monday webinar, but 2 stocks that were catching my attention were CHGG and also BOFI, because I have been monitoring them on my Squeeze Me. My Squeeze Me trend top list is something I'll glance at 3 or 4 times a day and then come through and decide which ones look interesting. In other words, which ones are going sideways, kind of like this. That's not a bad look either. But these stocks, even AGIO, definitely relative strength. So let's come down to BOFI, which I had been watching. I loved this 5 or 6 days sideways action, and then look at what happens here. And I've got a perfect analogy for this. The whoa, head fake, and then go. So somebody once explained to me when trying to learn to golf, when you do a golf swing, it's kind of like swinging a bucket full of water. If you're going to take a bucket full of water at rest and then just try and blast it forward, all the water is going to spill out. So sometimes you have like a little bit of a back move, counter move, and then the momentum swings. And I can't tell you how often Andy and I have seen this. You're waiting for a breakout here, but the price action, for whatever reason, wants to pull the battering ram back one more time and then let it go. And so let's see. I've been watching this pattern here develop last week, and then coming into the later part of the week, both BOFI started to pull back. Well, going into the weekend, we had 2 green candles, which essentially bounced like clockwork off of the 20, bounced off the 20 here, trend line, bounced off the 20 here, trend, bounced off the red 20 SMA again here. So we have 3 touches of very strong trend intact. And again, when you compare it to the volatility and craziness of what's happening in the general market, well, then you start to get interested in stocks that are holding their own and not getting caught up in all of that crazy backdrop volatility. So once I saw that BOFI had pulled back and put a nice wick into that 20 period right there and bounced into the weekend, I mean, we pretty much knew Friday night this was probably going to be the call, again, for a couple of reasons. Relative strength, holding up well. Been watching it, been stalking it. 2 days of pullback, and then a nice bounce off the typical, off of the expected 20-day moving average, and we were going to come back and make an assault on that level. Now, for those that remember, the play here is looking for stocks at 52-week highs that have a high short float, and boy, did BOFI. At last count, this is probably less than 40% now because we only get updated twice a month, but at last count, BOFI had 40% short out of 59 million in the float. Again, that's significant. That's like somebody yelling, fire in a crowded movie theater, and everybody heads for the doors at once. And that is what's happening, I believe, in BOFI. That's exactly what we hoped would happen. It's going to disregard what the market's doing, and if it triggers a new 52-week high, it's going to light up a lot of consoles on the institutional side and the day trader side that are going to want to pile in and go long. At the same time, having the painful short sellers who were not only but stubbornly painful, being stubborn by not getting out and not recognizing that there's 40% of other people in the same pain, and they're just going to continue to, drive this thing higher, hopefully, fingers crossed, like a momentum wheel. So where are we on, the stop? Well, I think once we get a push in the right direction, there is nothing wrong with moving up your stop. I'm not exactly sure. I can't remember what the stop was. I think it's somewhere around 36.50 down here. That could be moved up now. Let me ask you your help here, Andy. Where do you think might be a good place to move that stop up if you had to? Or would you?
First of all, let me ask, what kind of percentage gain are we looking at right now?
Okay, we're about 5% right now. Okay. The total is right up here. The target is at about 10%. I mean, there's no back history for me to go back and look and see, what that level looks like. So it's just kind of a, hey, let's go for a 10% up here in blue skies with no resistance. So we're risking like 4 to make about 10% in this case.
Well, I thought you gave a great, I guess, a technical indicator to follow there, and I would say if it goes down and breaks that 20 again, yeah, I would, I kind of follow that. It's been bouncing off of it now for a while.
Yep. So what Andy's saying here is, 1, 2, 3 times in the past, the 20 has held. 1, 2, 3. So if this thing wicks, reverses, and wants to trade back down below that 20, well, for right now, it's pretty much, we'll just mark it up right here, but I agree with you there. I'm glad you kind of shook me a little bit because I was wondering price-wise, pivot-wise, candle-wise, where we'd put that, but you make a great point. The 20 has been holding pretty well, so we'll use that as our guide so we can up the stop here a little bit. But again, just looking for a 10% move, there's really no arbitrary reason why 42.75 was picked. I would never blame anybody for kicking a third along the way just to lock in some trades, because you'll be amazed. Again, you've heard me say it many times. It's an emotional game, and whatever you can do to help keep the emotions at bay is good. If you don't sell and you've got your full boat, then you're starting to play the do I take the bird in the hand versus the two in the bush. And typically when you do that, you might miss a bigger move. So you can have your cake and eat it too. You can have the bird in the hand and wait for the other one in the bush by selling just a quarter, a third, or even a half of that position. And you'd be amazed at what it does for you mentally and emotionally. It takes away a lot of the anxiety and fear of losing the profits that you already have, because you've bagged some profits. And even more so, the most important thing is that second half, or the last third, whatever you want to leave on there, you're going to be very patient with that piece. You are not going to second guess yourself. You're just going to let it work for you. And you might find that sometimes that last piece actually makes the majority of the money of the trade. A lot of people will get in with good size, scalp out a little bit, then maybe trim a little bit more, and then let the remaining third run. And that's where you can turn your back and not be so emotional about it. And that's where the money can start to be made in swing trading.
Mm-hmm. And also keep an eye on the market. Keep an eye on the market too, as well. If it looks like we're going to be, kind of range bound, in other words, we try to move higher and we roll back over, that's another reason why you might want to, peel some off. Just take your profits if the market's going to be in a funky range bound, versus a market that goes back to highs. So. Mm-hmm.
To the person that Andy was addressing about maybe having different values in the AI, what you might want to do is go to account and hit reset connection. If there is any glitches or anything like that, that may solve mm-hmm. that. Lastly, before I move on the trade of the week, also we knew going into the weekend, we've been watching some of the sectors, and we're going to look at all these sectors in a little bit. KBE, national banks, and KRE, regional banks. Look at those charts, guys. I mean, KRE, regional banks, just broke out today. Nobody's really talking about that. But Bank of Internet Holdings, is going to fall somewhere in between the KRE and the KBE type of ETF. So a very strong sector to boot. So when you add in the 40% short, that's just icing on the cake. And I hope that it continues to squeeze those people higher throughout the week in BOFI. But again, if we have a nice push tomorrow, I wouldn't fault anybody for taking a little bit off. Anything else we want to touch on here?
No, I think you covered it well.
Yes, Marcia, we have the change from the 20 SMA for stocks that bounce off the 20. So you can use that as a guide. That's one of the top lists that we have, and it's not going to give you every single perfect stock that's right at the 20, but it's going to be at least stocks that have showed some weakness going into that level and then bouncing at or near the 20. So yes, you could use that change from the 20 SMA scan for stocks. If Marcia, again, if we get back into a buy the dip market, that'll be the way to go. But we'll see if we get back into a buy the dip market. We shall see. All right. Let's see. I was going to talk about. Don't want to miss this. My screenshots were in vain unless I show them. Here was yesterday. Yeah. It was yesterday, guys, and this is the beauty of trade ideas, having this single stock window, taking a look at what's going on under the surface when you see a stock make a new high and break out above a critical level. Well, this is exactly what I was hoping we would see yesterday in BOFI as the stock triggered. We had a quick opening that almost triggered, and then we came back down, and for a while I thought the market might sell off and we may not have a trigger this week. But the buyers are strong and they're resilient. The zombie market. 3 candles came back in, and as it was pushing through, I managed to get a screenshot to demonstrate. Well, the relative volume was basically 1.0, just under 1.0. It got better throughout the day. But here, the push of 5-minute volume was double, and the 1-minute volume was almost 6 times normal volume. So these are the kind of readings I like to see at critical junctures. So that was, one part of the screenshot. And then where do we get? This was yesterday towards the close. Okay, so we pushed through, we pulled back, and hey, look at how that 10-period moving average that I've always been talking about recently really came into play once the momentum started to show itself. It held the stock pretty much up all day. And as we were going into near the close, again, breaking out to new highs, 440% on the 5-minute, 433%. This is giving me extra confidence that the short squeeze is on, that there are short sellers in there who are scrambling to try and cover. And then today I think I grabbed another one as we were just petering up to new highs. Once again, not as big as the other ratings, but still 250% on a 5-minute volume as the stock is going to highs is good in my book. Relative volume today actually picked up over yesterday as well. So we had a bit more relative volume today compared to yesterday. So that's why I take these screenshots at critical levels to remind you guys, to really try to focus on what's bubbling under the scenes in the 5-minute and the 1-minute time frames. All right, so I think I know where I want to go next. There was a guy yesterday that was asking me. He says, "Hey, can you help me build a scan to find this one stock and what it did on Thursday?" I'm like, "Okay, I'll do my best, but you have to, send it into info@trade-ideas, and we'll sit down in the evening when it's quiet and try and figure out a way to do it." Well, actually, let me pull the scan out. I just use the example I had. And this is where I'm going with this, guys, is for you, when you build an alert or you're trying to find an alert that caught the stock that you were hoping to catch because that stock, is doing something on the chart that you like. And if we can break down that chart and the pieces of it and create an alert for it, that's great. But the first couple tries, we may not always get to it. Bounce to VWAP is the one. So this guy was looking for a stock that basically had kind of, sold off, but then was bouncing back up towards its VWAP. I didn't honestly see any value in it, but it's what he wanted, and I'm happy to help. And so he said to me, he gave me a screenshot and a couple of orders that said I need the stock to be down, in the morning and then bouncing back up towards its VWAP. And then he gave me a screenshot, and he said, "I want to catch what WTI did on March 1st. So that's what I had to work with. And I knew that if I got back to him with a scan, the first thing he was going to do would be to go to history and start going back, "Oh, did I catch WTI? Did I catch WTI? And then if it didn't, I would probably hear from him again, because I know that's really what he wanted to see." So what I want to show you guys is when you're doing this on your own and you're trying to figure out a way to catch, something that you saw, it's kind of trial by error, reverse engineering. Got to start with the big cone and then kind of narrow the cone down. So here's a little trick to help that situation when you are doing something like that. Let me go back to history real time. And so in configuration, what you want to do is go to the symbol list. And maybe some of you are aware, but I bet some of you are not aware that if you go to this drop-down menu here, you can isolate a single symbol. Okay, so he wanted to see WTI. All right, well, for the moment, let's change the orientation of this alert to only look for WTI. All right, well, we're in real-time mode. Okay, WTI did not come through today, and I did not expect it to. So if this is me working on it, saying, okay, well, let's hold the fingers crossed, let's go to history. I'm just going to do history all. And what history all is it basically just goes back through yesterday and then the day before and the day before that, and it just keeps running. So let me just grab this, history all. And since we're pointing towards just that one stock, this is where we're going to want to run into it here. And so it should come through. Give me a second. It's going to go through today's data as well. There it is. And wouldn't you know it, this is exactly where the guy wanted to see it on this day back here on March 1st. He wanted to see it right here. And so he was happy, and there it is. That's what he wanted to see. That's basically the scan he gave me. So rather than me, going through we're still going through history. Let's turn that off. Rather than me going back and then cycling through a couple hundred alerts, the easiest thing to do, and the big takeaway of what I'm showing you guys here today, is to use the symbol list single symbol. And you can use this to your advantage when you're doing your homework, trying to find if the scan picked up what I hoped it would pick up. And you can basically sift through all the other noise by using single symbol. But for now, let's put this back to where it should be, which is all symbols. We'll go ahead and go back and say, okay. So that's the alert I gave to him. I didn't hear from him today, so I assume he's happy. All right, let's see here. Do we have any questions that we need to get to?
No, we're pretty, we're caught up. I've been answering. Kay was thinking that Bofi was it sold off in after hours, but I think we both agree that it's it's not really doing anything. Yeah, I have already taken a look, but go ahead. Let me show you how we can do it. Put it on post market.
It's one tick. It's just one tick.
I know.
If it was a big green candle from here, a big red candle from here to here, then maybe there's some selling. But these dotted and dashed lines mean one thing.
They mean nothing.
Mean nothing. So not too concerned about that. What else did I see? Somebody said something about a 1 minute candle. So
she changed it and she saw that it was trading at 440. So she thought it had gone down to 39.50 or something.
I'm happy to share that alert, Melissa. It's somebody else's design, and there's going to be a lot of stuff that comes through it, but it could be, a starting point for something that you might be interested in and changing up and adding to. It's called Bounce to VWAP. So sure, you ask, you request. Oh, revoke sharing. I don't want that.
No.
How do I turn that off?
Oh no, I've never hit it before. Let's see.
Okay, here. Oh.
See if you can hit cancel, and then try it again.
Bounce to VWAP. There we go.
There we go.
Share. That was goofy. Okay, copy all, and I'm going to drop this in the chat window for anybody that's interested. This is just called Bounce to VWAP. Something that somebody wanted and they got it, but the whole point of that exercise was to show you all how you can use that single stock filter to go back into the history and see if it caught what it is you hoped that you were trying to catch. Okay, what is the FIT heading? I'm not sure what that is.
I'm not sure either, Marguerite.
I can't answer your next question, StockTwits. What is StockTwits? StockTwits is social media. Let's just leave right here. Let's go ahead and leave my default layout and go to social media channel. Okay, this is what is the crowd speaking about, and essentially StockTwits is one of the biggest social media platforms devoted only to stocks, and so Trade Ideas monitors the StockTwits flow, and it knows exactly how many times a day a particular symbol should be mentioned. So if a symbol is being mentioned 100 times more than normal on StockTwits, something's probably happening. And so it's just a different angle to try and see what might be in play or what the people are talking about. So that's what the StockTwits filter and channel would be doing for you. Load the layout back to my default. Marcia, I've had a hard success trying to develop a strategy that just trades the market with one stock. I mean, I'm not to tease you, but there was a time when you could do that. That was about 1999, 2000. It's just been really hard to find. I don't know of any traders these days that just focus on one stock. There was a time when traders used to focus only on the New York stocks with 3 symbols because they were going through a specialist, and they would trade that one stock like a monster, just kill it because they knew the specialist, they knew the way in which the specialist operated. We don't have specialists anymore. We have algorithms and HFT and market making algorithms that high frequency trading that essentially run the market. So I don't have a warm feeling on trying to create a strategy that just revolves around one particular stock always, because that's one of the reasons we like to trade the stock market. There's thousands of other ideas out there every day, and there's a handful of opportunity in different names every day that are, in my opinion, easier to try and exploit than just try and figure out what one stock is going to do. I think those days are kind of behind us, unfortunately. Okay, yes, it only looks to StockTwits. I do not believe it looks to Twitter. I can ask on that if it looks for $ Twitter, but I don't believe it does. I believe it just looks to StockTwits. Steve, do we have an option to make a scan which will make selection based on short float? Yes, Armin. A lot of people like to scan for stocks, and I'll just show you real quickly. One of the ways you can scan for low float stocks is just pop a new high in there, add that alert, and then when you get to the filters, you just want to have a float filter in there, and there it is, the float size. So if we add that filter, some people think anything under 10 million, 10, 1, 2, 3, 1, 2, 3, that's going to be a super low float. And if you look at the show me button here on that, we get is a histogram that shows all the stocks in the market is this giant bell curve. But everything that's grayed out, these are the stocks in the US markets that are above the 10 million float. So you get a graphical representation here of just the low float stocks that are going to be available to be scanned. And so you would do something like that. You'd put a max in the shares column. Again, 10 million max is probably going to find a lot of low float type stuff. All right.
As a matter of fact, I will drop you one in there. I have one called Low Floaters on the Move with volume. So I will share that with you and drop it into the chat window. So.
All right, thanks for Christopher giving me some news out of Washington that one of the cabinet members is resigning, and the market probably is not happy about that for whatever reason, but I'm not going to speculate. Thank you. So we are getting some aftermarket weakness there in the S&Ps, so we'll see how that bodes for tomorrow. All right. Okay, so let's round out the session by taking a look at the sectors. One more question. I had a lot of success with the flip scan. Do you have a favorite flip scan? Actually, no, Marcia, I don't have a favorite flipped scan. I do use the horseshoe up and the horseshoe down, which is basically flipped back and forth. But other than that, not really using a whole lot of flip scans at the moment. This trend change lubricant could become an interesting flipped scan at some point, because if we duplicate it and flip it, which I'm going to do right now, we could start to see stocks that are not breaking their downtrends like the trend change lubricant does, but stocks that are breaking their uptrend. So we go ahead and flip it, click OK, and there's one more thing I need to do. I always forget this on this example. The filter of short float, need to take that out because that is not really applicable to this flipped strategy. So if we take out that, we'll get a few more. All right, so now we can look at this flip strategy. These are stocks that are in an uptrend but are now starting to roll over. Weight Watchers, ooh, starting to get ugly. So the market's not really ready for this type of scan yet, I don't think, but if we get into a bear market where all of the rallies are being sold, then I might start flipping some of the directional scans. But for now, the only one that I really use both of is the horseshoe up and the horseshoe down. Horseshoe down, once again, if we find, yeah, that was not a good example today, so not really a good example for that one either. All right, so what I want to do to finish up, guys, is take a quick look at the, you keep asking good questions, the idea surfing heading. Let me just quickly show you. Idea surfing means if I click on that now, look at this top list. CVRS is coming through. What's going to come next? ADRO. Let's all watch it together. ADRO is going to be next. And there we go. And then it'll go down to CLSN. So what it's doing is it's surfing through the top sorted T windows, only 3. After it's done with CLSN, it'll migrate to another top list window that I have open somewhere. To turn that off, you click the pause button. Or if you're like me and you don't want to use it at all, you can use the tools and options configuration right here. Uncheck enable idea surfing. So that's enabled, that is disabled. If I had a checkbox in here every time I start the program, we're going to start chart surfing through some of my top lists. And it's really a user preference on that particular tool. Some people like it, some people don't want it. So I'm just showing you how you can turn that off really easily. So how we would like to end today is that let's take a look at the sectors and look at these charts and see what looks interesting, what looks ugly, what looks poised, and what looks just stay away from. Interestingly enough, the market opened up today with a lot of strength in gold. If anybody didn't catch that, gold and silver gapped up. And looking at our sector heat map here, the gold miners, GDX, pretty much gave away some of the day, but had a strong day nonetheless. We're going to look at these charts in total. Not really seeing a whole lot of reason here. It's kind of a big rejection wick after a bounce, so nothing really going on there. Silver, the commodity, looks very similar to what the gold miners look like. This is going to look very similar to the main gold miners. These are the junior miners. Natural gas. I don't like to trade natural gas because, I mean, look at all the gaps. It trades almost like a foreign stock, but it's actually kind of coming out of the doldrums here, but I don't think there's anything really to focus on that. What about the home builders? Well, the home builders tried to make a little double dip down there to a new low and kind of climbed back into the range. Ooh, even more significant back here. Home builders are going to have to defend this line. Interesting. Now, I just happen to know this is going to be a good one. This is the broker-dealer, all right? Broker-dealers had a wonderful day. I think ETFC got some upgrades. I think Schwab also had a nice day. The brokers, for whatever reason today, upgrades or what have you, I mean, let's look at this. The IAI index ETF is trying to break out to all-time highs, if not already. I mean, pretty much right there. So, guys, tomorrow, you might want to scribble down broker-dealers. IBKR is another broker-dealer, very similar in chart there. The only caveat is they've had 3 days of hard bounce, you know, up to this level. There may be some consolidation. But keep in the back of your mind, the broker-dealer index is looking pretty strong. GLD, we've kind of went through that one already. Retail, all right, retail. What's going on with retail here?
Kind of like the spiders.
Kind of like the spiders. Got hung up at its 50-day moving average. If retail can clear, let's move that basically up there. If it can clear those two twin towers, then retail might start looking interesting. I happen to know, because we already spoke about it today, that the regional banks are strong. And that was KBE, that was the national banks. And the regional banks was KRE. So two very strong. So the broker-dealers and the banks, curiously enough, are showing really, really good strength. So mental note, guys, you know, keep an eye on those sectors going forward. TAN is the solars. Looks kind of like the spiders, just getting caught up in the 50 here, not much there. Chinese stocks, also looking kind of like the spiders in general. KRE again, just imprint on that, love that. And then now we're going to start to get into the stuff that's not doing so well today anyway. Here's airlines, looking a lot like the S&Ps. Now steel has been interesting lately because of the tariffs and the news. Could be one to watch. Let's see if this thing can try and build a base camp here and move back higher and start to create maybe a cup and handle looking situation. But again, the caveat here is steel is a very sensitive news stock right now with what's happening with the tariffs and things like that.
Almost like an upside down head and shoulders at the top of the range.
Yeah. All right, what else we got? Oil service, kind of in the basement. It's going to have to dig itself out of that basement. Semis, well, they started the day off yesterday, and they have been really strong. And this is one of the main reasons, guys, that the Qs, the NASDAQ, has been so strong. Got a lot of technology and chip companies doing well. So let's rehash. Broker-dealers doing well, bankers doing well, and semiconductors looking pretty healthy. Let's see if there's anything else looking healthy. Nope, that looks pretty ugly. By the way, this is the ETF for the 10-year Treasury. If the Treasuries continue to get sold, if the price of the Treasuries continue to go down on this ETF, well, of course, Economics 101 reminds us that interest rates are going to go up. So that's one of the reasons. Which
is good for the banks and the brokers.
Which is good for the banks and the brokers. Thank you. And what I was about to say, tongue-in-cheekly, was that last week we had the Fed reminding the market that, hey, we're here to buy bonds if need be, meaning we don't want interest rates to go up too quickly. But the banks and the brokers seem to smell a tick up in interest rates this year, and they're looking like they're going to benefit from that. Okay. Biotech, I don't really look at biotech too often, but this is kind of an interesting level. If we can clear that recent level and move above that, then it's moving out of the range in biotech. This is commercial real estate. That's a pretty ugly downtrend. I'm not going to try and predict anything there. Healthcare looks very similar to what the S&P looks like, but not even quite back to the 50. How did KRE move down that list so quickly? How did that happen?
I don't know.
Look at that. Oil is a commodity. Not going to look really at a commodity. Qs, energy. Energy's having a hard time fighting the battle as well. It got slammed pretty hard, bounced back, but look at these declining moving averages, kind of keeping the price in check there. That's not very bullish. Technology, of course, is going to be looking good, like the semis and the NASDAQ, and getting close to the bottom here. XLF.
You must have your watch list on live always. Yeah, that's why it's causing that. There we go.
Yep. So what's happening after hours, guys, is we're getting some reshuffling here. That's why KRE just dropped a lot. Maybe let's take a look in the after hours and see what it's doing. Oh, wrong chart. Just out of curiosity, let's put on the post-market and see what the banks are. Yeah, tick, tick, tick. They're kind of falling down. Let's take another look at the S&P again. Now we're getting weaker.
Ugh.
There's some ugly news out there. I'll disseminate it when we're done with this webinar. But interestingly enough, we got slammed at that 50, and after hours is not looking good. So some of the stuff I was talking about on the market recap is starting to evolve here in after hours. Give us a bit more.
It's a hair trigger market, and it doesn't take much. You can see there in the spiders, especially if that's just on Cohen resigning.
Yeah.
See.
All right. Let's see. The only one left he has to talk to is the Arby's delivery guy. Okay, guys. So we're coming up on the top of the hour here. I think we're going to go ahead and just wrap her up. Again, if you want to jot down what we feel is some interesting sectors to watch, definitely the broker-dealer, IAI, which is going to be comprised of your Schwabs, okay, your interactive brokers, IBKR, and then ETFC. Those are going to be your big three, quite honestly. There's probably some smaller ones in there, but those are showing some interest. And the banks, maybe get familiar with what some of these bank names are, because well, again, we'll see what the aftermarket brings us tomorrow, but going into the close today, banks, broker-dealers, and semiconductors looking pretty poised to move higher if the market will allow. So that's it. That's all we got for you today. I'm going to bring in Scott and put my slideshow back up. And for those of you who are not current users, Scott has some interesting information for you. Come on in, Scott.
Thank you. So we do have a podcast, and we're hoping everyone will subscribe. So go ahead and search for podcast, the Trade Ideas podcast, in your favorite application that you listen to podcasts in, and it'll come right up. Click on subscribe, grab the newest episode. Stay tuned for Friday's episode and enjoy. It's good stuff. We put a fresh one out every week. We just do it for you guys. So give it a listen. We have a book. Steve and Andy participated. So did Sean and Jamie. And we have 5 ways to win in a post-BTFD market. When buying the dip no longer works, what do you do? Download the ebook, tradeIdeas.com/ebook. Get 5 strategies to put into play. Now would probably be a good time to start adding these to your toolbox. If you want to join Trade Ideas today, you can get 15% off your first month or year. This code is also usable to upgrade from standard to premium. Just use Lucky Holly on checkout and save 15% from your first month or year. Start Trade Ideas Premium for under $6.20 a day. Go ahead and give it a shot. Any questions, email us info@trade-ideas.com. You can contact Steve. He's Steve at. Andy is Andy at. Follow us on Facebook and Twitter. Share the stuff we post. Steve Gomez is Today Trader on Twitter. Dan Merck is Trade Ideas 1. We also have Trade Ideas, some other handles. And you can find us on Facebook. We're Trade Ideas Pro on Facebook. Like our page. Share everything we post with all your friends. We love that. Thanks, guys. Thank you, Steve. Thanks, Andy.
All right. Thank you.
All right, thanks, Scott. Thanks, everybody. See you Thursday.
See you all around. Yep. Bye-bye.